Good morning, everyone. My name is José Salazar, and I'm a sustainability manager at PwC, working mostly with companies, helping them to develop ESG strategies and net zero strategies. Today, I have the pleasure to be moderating this excellent panel. Just before we start, we'd like to get a sense of the audience in here. How many of you are investors? If you can please raise the hand. Okay. Corporates? Great. Startups? Okay. And working directly with the battery startups, or let's say battery sector? Okay, interesting. Thanks. Thank you so much. Okay, then just a couple of words in terms of the battery startup market. It's growing very rapidly based on PwC's latest research. We have seen how in the last few years it has been growing at a very high rate of 1,722% year-on-year growth based on the 2021 data. And just in the first half of 2021, there were 18 deals valued at more than 5.9 billion of USDs. This has been fueled by a number of factors, including the need for energy storage capacity to support renewables, electrical vehicles, as well as the market reaching a tipping point in different types of applications. Today, we would like to explore and discuss the question of how can battery startups bridge the gap between component innovation and mass manufacturing. And I think we can kickstart the discussion from the angle of how do we see the battery startup market right now, going for mass manufacturing, do we want to de-risk it? Opening the question to you guys.
Yeah, happy to start. Hello, everyone. Lucille Bonnet from Klima. We're a growth stage fund focusing only on energy tech and basically active all over Europe. My question, and it's more to you guys kind of operating the startup to start with, is once you're having this kind of innovation at component level, do you actually have to go to the mass manufacturing steps? And then potentially afterwards, we should talk about how to bridge that gap and also what you need to consider while doing fundraising for that. But in the first stage, I thought it would be interesting to understand why would you go for mass manufacturing? We're also looking at companies doing component innovation. There are some contract manufacturing opportunities out there. You can also kind of course, go down the value chain and fully integrate yourself. You get more value, but at the same time, it's also harder, right, to deliver on the economics. So yeah, probably a question to you first.
So I'm Will, I'm from LiNa Energy. We make sodium batteries very much on that component innovation side, right? The way I view that is that the mark of a good battery startup or not is the scaling journey. I think there are a lot of promising, innovative performance characteristics for new tech out there. The key will be scaling up and also I think having a really good product market fit, right? What is missing in the current energy landscape and how have you fit that niche? So then when it comes to scale up, we're of the view, look, we are, and not me, but the people that do all the work at LiNa are a bunch of scientists who have innovated on a core component, and that's our bench strength. And so that's where we should try to stick as much as possible. But the practical reality as well is that you're going to have to de-risk the manufacturing process at least sufficiently to bring in manufacturing partners, because I think it's naive to think that brand new tech, you're going to find an industrialist and they're just going to take on all that tech risk themselves. So for us, it is a bit of a capital inefficient process, but you have to at least get to an A sample and manufacturability and level of automation where you can bring a contract manufacturer on board, or you can enter into a venture with that expertise on a decent commercial basis, because otherwise it's almost like they're investing in the startup itself, and that's not the risk-reward relationship I think that is sustainable. So that's our view. I'm not sure if it's right, but... And
so you need to prove let's say the commercial plant's economics before you would be able to outsource mass manufacturing.
Exactly. But to be fair, I mean, that we're talking about tens of millions as opposed to hundreds and into the billion-dollar scale, which is required to actually commercialize battery tech, right? And so we would very much stay away from that side, but work early to bring that expertise in, right? Early doors to try and de-risk the tech. I think probably also useful to hear from the manufacturing expertise as well.
Okay, Thanks for having me here. Jakub Miler, and I'm working with 11is, a company which intends to produce on a mass scale LFP batteries in Europe. And referring to your question, I think it's, I'm not sure if we have such an alternative, because if you look, I mean, if you do the reality check, what is really there in terms of cell manufacturing these days, I mean, you have only China and US. And in that sense, we talk a lot in Europe about the cell manufacturing, but we don't have a single company that actually mastered the process yet. And there's a lot of those companies. I mean, we invested in my previous hat as LiNa Energy. In a couple of those, they're quite successful ones, but in terms of really managing the process and getting the scrap rates at the right levels to make it really profitable, I don't think we have such options these days. So it's the entering into that space of scaling is in these days is the only alternative I see.
Yeah, and that's very interesting because I'm conscious that before your role at 11is, you've been working with EIT LiNa Energy, including board roles, more than 30 years experience investing in different energy storage companies. What would be the key lessons or challenges that you have seen the successful startups overcome? What are the lessons learned, let's say, from the last decade to the next decade going forward?
Yeah, it's actually interesting because you guys, I mean, represent the investors and then the startups, and I will be just switching my hat, a bit relying on one of the experience and then wearing the other. I mean, I jumped the ship only a year ago, and indeed, like for 8 years, we've been working with the energy and investing. We probably have one of the biggest portfolios in terms of energy storage. I think, as you said, more than 30 companies. And I would say, I mean, spanning throughout the whole value chain, from raw materials, cell manufacturing, et cetera, up to recycling. And of course, the holy grail is the cell manufacturing. This is the core thing. This is the unique thing that you can create. And even in that space, I mean, these are actually the most successful companies we have. I mean, we have 3 which together were able to raise 8.5 billion euros so far. I mean, starting from the very early stage, like a seed stage, when we become the investors. And so I would say we have a bit of an experience already and see which things has worked, which has not. Yeah? And when I like trying to identify 3, not to take too much time, I'm pretty sure there's much more that you can get from my colleagues, but just focusing on 3, first of it, you have to anchor like a strategic off-taker from the very early days. It's so important on so many levels that you cannot really imagine. I mean, first of all, in terms of design, in terms of integrating your cell into the final product, then even in the scaling, like guaranteeing in kind of a pay-or-take structure of off-take contracts that you can actually get a debt financing for the ramp-up stage, it's super, super important, and I think it's priority number 1. And then if you look at it, I think it's also important to remember what is your focus. And in these days, you have a lot of stuff popping out, I mean, silicon anodes stuff, and it's always tempting, like, okay, we add something extra and we make our battery like a bit better, right? But it's not really about that. I mean, the key thing is to have 1 million batteries on the same level. If it's only above average, that's fine, then having the best battery. This is what everyone is looking for. This is where you get the cost at the right level, and this is the quality and the performance that your off-taker are looking for. And the third last thing, just to complete on this one, you have to think about this as a really big and impactful project. The gigafactories usually consume a lot of energy and a lot of water, and you have to employ many, many people. So you really need to think not just about the relation with your customer and with your investor and just making sure those 2 work, but there is a much broader audience of a stakeholder that you engage with, the government, the local, let's say, community. And I think not everyone is really aware of it. Even such a giants like CATL is having huge problems these days in Hungary because of local protests and stuff. So I think, as I said, these are like the key 3, many more. Huh?
Yeah, fascinating. Maybe Lucy, from your experience.
Yeah, I would agree on the first point, definitely on the offtake. So that's for us as well very relevant. Of course, we're growth investors, so when it comes to new tech, it has to be completely de-risked and validated by the customers, and especially if you go down the capital-intensive route of manufacturing yourself, then that's basically key. Not sure you actually have to have 100% of your production capacity off-taken with take or pay, but at least a very significantly, yeah, but significantly part of things, and that enables you actually to probably access debt financing and reduce the overall cost of capital for that.
Absolutely.
I think there are many also, I mean, there are a lot of reducing the cost of capitals for us, at least looking at a round of, tens of millions in order to set up manufacturing. We would look also as what non-dilutive source of funding can you put together from national EU funds. There's a lot available here because we are here, well, basically it's at the crossing of manufacturing and energy transition. So I mean, Eastern Germany, for example, is subsidizing a lot, and there are many different local, regional subsidies that are really, really big for that. So decreasing cost of capital. For that you need offtake, and I think the third point that we see at least is experience in manufacturing and getting the right people on board. I guess Europe does not really have a very long-lasting industry when it comes to battery manufacturing. I think it was 40 plants as of end of 2021 and 70 plants overall in construction on top thereafter. So, and within the 40, probably not very many, at very large scales. So that means that you also have to build up the talent pool of battery manufacturing experience in Europe, and that's probably kind of where we are looking. The thing we are looking at first, right? So it would be offtake, cost of capital of the overall projects. Does it actually also match the return expectations that we have? And the third point is definitely does the team has the experience? Can you hire the experience from basically the few companies that have been doing that in the past here in Europe?
Yeah, it's interesting. And in terms of, let's say, upscaling the technologies, from any of your perspectives, besides VC investments, national funds, EU funds, what other funding options, let's say, can startups be looking at these days to de-risk and upscale?
I think if you're going to be serious about manufacturing, it goes back to that strategic offtake. The most logical way to align your incentives there is to have your strategic offtaker also invest in the startup itself, right? And therefore, you have a nice, clear, aligned incentives. I think if you're going to be bringing something brand new to the market, assuming you've got the message on exactly why the market needs it, that's critical, and you've got a cohesive story about how you're going to scale it, I think you still have to recognize that to get a ironclad offtake on something that is brand new to the market, it's relatively unrealistic unless you have aligned those incentives so that your strategic offtaker is also going to benefit from the upside. So I'd say that's pretty key when you get to the scaling up of the manufacturing. That's probably something you want to look at very carefully.
Yeah.
Plus the strategic could also bring manufacturing experience, right, on top, I think.
Even better if they bring captive demand.
Yeah, but that has to be, in my view, at least where we would completely welcome also strategic participation in such funding rounds for the manufacturing experience. Also, of course, for the funding power, for the interest, for kind of showing the validation on the team, on the technology. That needs to be balanced with some financial investors on board, in our view, but that would be definitely something to do.
If I may, I mean, in terms of those off-takers, you need to also stay careful. I mean, as you said, I mean, you would not prefer to have a situation that you have one big one that is somehow absorbing almost like 100% of what you have. Because, I mean, when you sit down to these negotiations, the first contract you're gonna get, I mean, you're down to the bone. I mean, there's not really a margin that you can really live with. But that's how you pay for being actually invited and being able to sit at the table. And you get your first contract like on a zero margins. This is where you play, where, let's say, governmental incentives come in very handy, because this is how you create margin these days. The fortunate thing about the batteries is that these days this is like a industry of geopolitical importance, because, I mean, a lot of economy depends on it. I mean, the energy security first thing, as we see now because of the situation that we had in Europe. That's like number one. But also jobs, how we're going to keep the jobs, and especially in the automotive sector when we see so many very reasonably priced, not to say cheap, cars coming from China, and our let's say, our sector OEMers not really being able to compete. So from that perspective, I mean, Europe, we see the actions has been taken on the US side. I mean, IRA is exactly something like that, which is subsidizing and allows the companies and actors who want to establish their business in the US to be on the same playing field with in terms of the pricing with the Chinese counterparts, right? And I think we expect exactly the same. So it's, for the strategics, it's like, I mean, both of those parties expect the government to play a significant role in actually de-risking this business at that stage, because again, from the very geopolitical and safety perspective.
On the financing side of things, I mean, we've met with many infra funds also while doing the fundraising of Klima, or institutional investors having infra pockets, and so looking at more, you know, exotic investments opportunity for them apart from solar and wind, that kind of the return of which is you know, has been going down basically. So looking more at you know, 10 to 12% IRR profile. Are actually the plans that you are building up bringing that yield or that expected return for such that you could also address the financing through infra funds?
Yeah. Short answer is yes. Probably, I mean, the last, let's say, forecast I saw was still before the hiking cycle, so probably that might have changed a bit these days. Well, it depends what your expectation in terms of, you know, percentage rates for the forthcoming months. Probably not going to stay that high for too long, but we're expecting something around healthy 15, 16.
Because there would be, I mean, there is a lot of let's say, dry powder within infra funds generally, and their target return would be kind of around 10, 12%, much lower than, you know, what would be at VC or private equity sector anyways.
Yeah. And since the energy market is right now undergoing major disruptions, and we're also seeing the EU coming with a new set of packages, recently started to discuss about the EU Net Zero Industry Act. We already have seen some drafts. Maybe Will, from your perspective, working in the energy market for such a long time and having senior roles at ExxonMobil, how do you see these dynamics playing in terms of the battery space with more established traditional players?
Yeah, I guess my view would be that as a startup, going back to, you need to understand what you're trying to disrupt. And I would say for liquid, well-connected energy markets around the world, LFP is already the de facto choice, and that's happened very quickly, but it's going to be very hard to take on LFP on its own merit, right? I think where I see the points of disruption right now is on longer duration technologies, and you have to be very careful that long duration has become a bit of a bubble word where it's just like, okay, it's long duration, and it's being used as a technical word as well, right? LFP can run for 24 hours or whatever you want it to run. It's what we're saying with long duration is you can bring in a price point that is low enough to make a 6-hour battery or a 10-hour battery economic, right? Where lithium-ion economics aren't working, and those use cases are clear, especially in the growth markets, and I think that's probably as in emerging growth markets, not the incumbent growth markets. And I think that's the other area where we'll start to see a bit of disruption is, you know, solar markets which need longer duration, so over 4 hours, and are also experiencing conditions that are a very different design case than is being met with our current set of technologies. So it's, you know, lithium ion is going to struggle in the heat. Flow batteries, a lot of them are temperature sensitive, and so you've got these pockets of opportunity around lithium ion where I think you'll have startups like ourselves make a niche foothold into the market, and then we go through to the scale up, which is something for our future, right? But if I take a step back, that's where I see the I guess the opportunity in the space. I'm not afraid to say, even though I'm sodium ion, I work for a sodium ion battery company, I'm not afraid to say LFP is the workhorse, right, at this point.
The thing with the LFP is that is almost like 100% produced in China, and with the let's say, manufacturing advantage in terms of the years, how much they spend on it, on the engineering, and in terms of the size of the companies who are offering it, it would be extremely, extremely difficult to compete with them. And even though it's difficult, we pick up that challenge, and this is, I mean, the assumptions for the 11 is actually to enter that market, and the claim that we're having that we can produce green, sustainable batteries according to the European standards as a company operating in Europe at the same competitive price levels. This is the underlying assumptions. That the way that we're trying to, well, we will achieve that is, on one hand, we have a really superior engineering experience from very similar industry that we've been operating, which is aluminum processing. And the most critical, let's say, process, which is in the cell manufacturing, is exactly like the company that we have most of the people coming from, has been doing for 30 years, which is the wet coating. I mean, just for you to understand what is wet coating, it is about the aluminum sheet being like 1 meter and moving with the 80, 100 meters a minute. And you have to cover it with a liquid with the thickness, exact thickness of the hair. This is like 50, 60 microns. Now, the variance you can have on this is like 5 microns, which is like 1/10 of the hair. If you don't do that, you have a problem. You have things blowing up, you have things not working, and you have to do it on a continuous basis. Now, in the aluminum industry that we work in, and was the biggest surprise that we got with the 11 is that these guys who are producing the yogurt lids on a regular basis, they actually have the same coaters, same machines on those aluminum sheets, and the variance that they can allow is only 3 microns. So it's actually even higher. I mean, the precision level is higher than the battery industry because they've been doing that for 30 years, but not with the chem, but with the paints. So we were like, okay. I mean, so what I'm kind of trying to say, there are a lot of industries that we can really take from because this is very nascent. I mean, 10 years. This is how long we are operating, and even the Chinese, it's only a decade. But like, for example, the things from Kodak, people who did the roll-to-roll things, we already see a lot of differences in the process. Of course, the microchips, but then pulp and paper industry. Norvolt is recruiting a lot of people from there.
The CD industry, right?
Excuse me?
CD industry, the old one, old CDs.
Yeah, exactly. And this aluminum coating is another one. So I think this is the only thing that we are left with. I mean, in Europe, if we want to pick up, you need to find those synergies and put them together. And there's a lot of things that we can actually take from.
And in terms of manufacturing equipment, I mean, one of the kind of bottleneck or things to really work on when it comes to mass manufacturing here in Europe is also accessing manufacturing equipment for setting. So where do you source that today? Do you engineer yourself? Do you?
No, there's no other option these days than to. I mean, it depends. I mean, they're kind of. Most of the companies, what they do, they have one big EPC. I mean, okay, we want to build. We have the money from the investor. Please build that for us. But with the experience that we have within this company and with the mother company from which it's actually spun off, there's the same companies that they've been working for many, many years. So they know each of those items. So these machines that we're procuring, they're of course made in China, Korea. I mean, in principle, all over Europe. But let's say that 80% comes from China. But they are very highly customized ones. So we design things that then are later manufactured and brought from China. But honestly, on this one, there's no options.
So I always have mixed feelings when I talk to you because on the one hand, wealth of knowledge about what this actually looks like in the flesh. On the other hand, as a battery startup, it scares the crap out of me, right, in terms of what mass manufacturing actually means. But I think there is a reflection here, though. I think there's a misnomer in the market that with existing or proven lithium-ion technology, that there's this plug-and-play scenario out there, right? And which is, okay, it's being mass manufactured in China, tech risk must be all gone, we just buy the same kit, plug it together and switch it on, and we should get some nice, 12% return or whatever. I think that this is the reality of it, right? Is that even replicating anything close to the yield on proven lithium-ion tech here in Europe is a mammoth challenge. And that is where there's a role for startups to at least bring certain levers to that table, which can help. And I would say the two most obvious is raw materials. Can we do something innovative about tackling that? tackle manufacturing costs from the base, and then the other is around energy density. The more you can get a better performing battery, the less batteries you need, and that is one of the best ways to reduce cost. But it's not easy, right? This is a huge challenge for us, and we shouldn't underestimate the technical challenge associated with scaling our battery industry in the West.
Yeah. And I'm just conscious a bit of the time, but would like to check with the audience if you have any questions. We can take one question if there's one. Okay. Well, then probably just to close the discussion, maybe it will be great to know from you guys, like from your perspective, what would you say in the short term? It's something that the audience should be keeping an eye on. It's a trend, development, type of technology, regulation. What is keeping you excited in this space? We can start with Lucy, maybe.
Well, I can start. Well, technology is great, but there is still also, I would say, working on the market and on the use case and on the different business models that you actually need to make, to monetize on the battery, any technologies out there that you need, right? So there are different applications that are coming up that are not trivial to monetize on and really to build up a nice business on. I think it's pretty clear that energy storage is needed. Mm-hmm. There are a few markets where, grid scale storage has, a pretty, let's say, already found business model. It's mostly, relying on grid support and whatnot. There are other ways to kind of improve the monetization of these batteries. But beyond that, and behind the meter use cases and so on, I think there is technologies today that can be rolled out, but the recipe to really make a nice business model out of it is not straightforward, and it's still a challenge to scale that up too.
I would say similar, I guess. Being in a startup, I'm most interested in that core tech innovation, and I'd say the most interesting parts there is where you're finding folks who have found a problem and are solving to the problem, and that problem isn't to do what lithium-ion does better. I think that just doesn't hold water anymore, right? But I mentioned earlier about you've got new markets with new environmental conditions. I think we'll see interesting stuff there, and we'll see people trying to build business cases around 20-hour batteries, 50-hour batteries, 100-hour batteries, because they've done the math on an entire grid basis, what's needed, and that tech is fundamentally going to look different to your standard lithium-ion, right? That is two core different problems, and it's not going to be the same tech as which is in your car, which is solving for that. So I think a nice just disruptive space there to look at.
I would say applications. I mean, everyone is living and thinking about the batteries, what we put in the car, maybe in some, tools. But we are talking about, if we're talking seriously about the net zero future, electrification of everything. This is what the future is going to be. And then we're talking about all sorts of transportation. I mean, we know the EVs now, the stationary storage is taken off. I think it's still heavily underappreciated how big this market is going to soon become. I mean, we don't have any updated, let's say, forecasts. The next go aviation, CATL already presented the cell density level, which enables actually to take a short flights with just on a battery planes. And there's going to be a lot more. So there's a lot of, let's say, different spaces that we can actually occupy, LFP, sodium, NMC. This is, just the beginning, and that's going to be many, many more.
Well, thank you so much for your insights. Thank you, everyone, for joining today.